As conflict in the Middle East continues to evolve, global markets are once again being forced to confront the economic consequences of geopolitical instability, particularly when it comes to energy, inflation, and investor sentiment. After an initial surge, oil prices have pulled back from their panic driven highs, but uncertainty remains elevated as traders assess whether this is just a temporary shock or the start of a more sustained risk premium tied to ongoing conflict. To help us break down what this could mean for markets, we're joined by Brendan Caldwell, director at Caldwell Securities Limited. Caldwell, Brendan, thank you so much for joining us as always.
Like I'm back in school, I'll answer to Caldwell, or more likely Codwell, depending on how my classmates pronounced it. So yeah, I'll answer to anything, Julie. Thank you, or
Well,
Stoutland
let's
if you prefer.
let's talk about oil. How the oil has come off its panic highs, but energy markets still pricing in a more permanent geopolitical risk premium rather than a short-lived shock, war shock.
Yeah, well, even the pre-war levels for energy prices already have something of a how does one say, a volatility premium in them, because there is actually way too much energy in the form of fossil fuels available. It's
Huh.
just there, coal, gas, for much of the world. So I mean, if they were to produce an uncontrolled amount of it, it's why OPEC exists, to manage prices. So I mean, they want to restrict the amount of supply so that they can keep the price higher and stay richer for longer. So if they wanted to make energy cheap, they could most of the time.
Hmm.
Not today, but most of the time. So there's already a bit of a risk premium in the price of energy, certainly when it comes to global prices, although different pockets have different costs. Anyway, yeah, the current conflict, is it a war? I mean, there's never going to be American boots on Iranian soil. So is it a war? I don't know. It's an exchange of missiles and press releases where a lot of people managed to get killed. So it's a very strange situation that, much like the second Iraq war, I'm glad Canada's not directly involved.
Hmm. Okay, so how durable is the disruption of the US Israel war with Iran, and who bears the economic cost?
Well, you talked about the energy being off their peak prices, and yeah, they are to some degree, but they're really skittish right now. So it's sort of absorbed. We kvetch about it, we complain about it here in Western countries that the price of gas is up. Now that can, if you're driving an SUV, I believe it was John Kenneth Galbraith, the great economist, who said, "Sucks to be you." But if you are, if you've got electric cars, it's all very well. But most people are somewhere in between. I think the real cost, though, is what it's doing to the cost of manufacturing, which
Hmm.
pretty much any manufacturing of anything takes energy. Here and in Europe, where the cost of energy is quite a bit higher, they do not have the energy resources in Western Europe that we enjoy here. And to the extent they do have them, they get them from Russia. So we talk about Brent oil, North Sea oil, but I mean that field is, if it's not tapped out, it's certainly wasn't what it was 50 years ago. So I think the cost of manufacturing is still going to be a thing for a while. I just don't know that the U.S. Federal Reserve or central banks in general should combat that with higher interest rates because of a supply constraint. Just because the price of oil has caused prices to go up, I don't think we should restrict the price of money, which is what interest rates are, which also makes prices go up. I'm not sure how that would help.
Hmm. Are investors underestimating how war drives inflation beyond just oil prices?
Yeah, so I think as we're chatting about, yes, so it isn't just the cars, it isn't just the SUVs, it's really everything. And what I was, I guess, beginning to say earlier was that in Western countries we feel it to an extent, but where this is having a really huge impact is
Mm.
in the developing world, where the price of energy is a big part of the marginal cost of anything. I mean, we're seeing it here in Canada uh, because the cost of everything is so high, and the cost of food production is affected by the price of energy. I mean, my little 20 family church at Avenue Road in DuPont, the church at Messiah, uh, will have a lineup of 500 families or as close to it as makes no
Wow.
difference. They'll have a lineup of 500 families outside of them because of food insecurity, which is largely driven by the cost of basic necessities, well, like energy.
What does persistent ceasefire evasion in regions like Lebanon mean for how investors price geopolitical risk?
Well, I think the thing about political events is that the market only cares about them for a little while. Once
Mm,
it seems to have got the measure of this. What I find unusual about this war is that people are still believing the president. Oh, we have a truce, we have a this, we have, and so it's been really up and down every time somebody has a competing news release. As I released, you mentioned Lebanon. Yeah, I don't think anybody's particularly seeking a ceasefire there, which is got its own set of problems. But I'm not sure how much the market cares about Lebanon as much as it does about the Straits of Hormuz, where all the
mm.
oil comes from. Really, the market hasn't cared about Lebanon in decades, which is unfortunate. But I mean, the world doesn't care about people as much as it cares about commodities.
Very
It's
sad.
just a
Very sad.
comment. So
Yeah.
it is kind of sad, but it is the reality. So I think if, as and when they have a settlement in Iran, whatever happens in Lebanon happens. But I don't think the market will take much notice, unfortunately.
All right, Brendan, thank you so much for your time. Always great to talk with you.
God bless you, Julie. Thank you.